Greetings, this is Samantha LeDuc, founder of LeDucTrading.com. I came to you on Tuesday and did a webinar presentation on allocating big returns for allocating resources. I have gotten feedback that it might be helpful to do kind of a more of a clinic, if you will, on operationally how I come to size up the market turns intraday. I am both a trader on multiple chase, swing, and trend time frames, but when it comes to market gyrations intraday, I am looking at sizing up opportunities that use options, both institutional option players, really, really big ones, the big asset under management type of flow, and the vol strategies, if you will. It might be a sophisticated term for some, but it's very, very helpful for identifying the flow, if you will, of the big currents. And then, of course, layered on top of that are lots of sector rotation moves and individual stock moves, and trying to anticipate direction, long, or short, I don't care, and using option activity, unusual option activity underlying flow as a tell to see where market participants are basically adding, subtracting, hedging, etc. But basically their sentiment. So I use it very much as a sentiment reader, and then I compare it with a chart. I'm a technical analyst. Pattern recognition is my thing with volatility, and I overlay all of that and use options as a way, both institutional and retail, to identify an edge. So with that, this is my company, and I have a website. You can check that out at your leisure. I do provide a live trading room, brokerage triggered trade alerts, newsletter. I actually post every single day. It's pretty intense writing schedule for me. I'm going to move my little thing here. Thank you, out of the way. In regards to sizing up the market on lots of different levels, meaning the macro backdrop, as well as fundamental, as market moving news, technical, intermarket. And the reason I do all that is because, one, I'm really into it, I'm fascinated by it, but also I trade for a living and I support clients who do the same. So this is for professional retail clients as well as institutional clients. And again, I said my focus is actually anticipating volatility, inflection points that move a market, stock, currency, commodity, interest rates, I don't care. I'm very interested because they're related. Bonds, credit market, equities, currency for sure. So I'm using this as a backdrop, if you will, to identify the trend. And it could be on a hourly chart. And we'll get into how I look at basically the option flow and the chart read, technical read, to identify when to enter and exit a trade. So this is my thing. I kind of operationalize this understanding of the macro and also the institutional for retail level trades, if you will. And that's my thing that I talked about kind of at length on Tuesday, was how I time market tops and bottoms. And I also admitted to this is a lot easier to time tops because they're distributive in nature, and I can identify lots of divergences under the surface, meaning distribution of money flow, intermarket relationships, which take time to form, and they can show weakness or strength. I can, get into this. You can go back and look at the video, in fact, which I think David did a great job of presenting kind of a one-stop shop for everyone's, day two. And I'm actually right up at the top, so I was the first presenter. So you can see my video from Tuesday, audio as well. That's really great coordination, David. I appreciate that. So for today, I wanted to get into this idea of how, if I'm so kind of multidisciplinarian, focused on lots of different ways to size up a market, from the big picture to the micro, the macro to the micro, what am I looking for in particular? So that was just from the other day. One in particular is this institutional level flow. Okay, so there is this, the quant, if you've heard of that particular emphasis, if you will, is a structural force, you know, under the surface. It is very, very, very much a structural force of size. And if you are retail, you kind of need to understand that vol strategies make the weather these days. So the gamma, and without kind of getting into an education on this, which I'm not here to do, actually matters. This neutral positive gamma of these assets, excuse me, of these CTAs and quants that have large amounts of assets under management, and whether they are, you know, just wall of calls, they're incredibly bullish, that brings the market up. If they are starting to add puts, if they're adding more puts, it creates, you know, that magnet as well. If they're lightening up, if they're starting to cover puts, they actually or roll their puts. And we're talking size here. We're talking tremendous size. Not like what you and I trade per se, okay? Then when they actually cover those puts, they're buying futures, which has, I believe, I contend, is what's been pulling up, if you will, the afternoon activity in the market, specifically Friday afternoon. We finally had our, you know, 5-day, I love that 5-day rule of selling, and then we have a bounce. And then it continued on Monday strongly, then it continued to a degree Tuesday. Then we have obviously a little bit of a rug pull by Powell, saying QE is not in the toolbox right now. But the point is, they have not been buying calls. They are still dealing with this put level that creates a drag. So even though intraday we've had some massive moves, like 5% from low to high, which, by the way, is not surprising given volatility is so elevated, and we'll talk about that as well. So when I talk about vol strategies, it means yield hunting, where hedge funds sell short maturities versus longer dated maturities. We're talking VIX volatility, which reprices everything, which is why it's important, and they collect the theta decay. Well, these definitely got really, really popular, and that short, if you will, of VIX suppressing, pushing down volatility, which helps, you know, keep the market bid, had a huge unwind, as you know, Volmageddon back in February of 2018. Well, this same occurrence was happening leading into Super Tuesday, which happened to be 2 days ago. And I wrote about this on the 13th, that this had to be unwound before Super Tuesday. And sure enough, we had the huge drawdown. And I say huge because it was the fastest on record, the fastest correction on record, fastest 10% correction on record. And actually from peak to trough, it was 15% from that Wednesday all the way down to the Friday low. So we had a major VIX unwind, but anyone who's watching, not anyone, but most who were watching this structural force under the surface kind of knew that we were going to have a little bit of a party here in the, let me just show this real quick, in this structure, the skew structure. So this was the absolute suppression of volatility that had to be unwound, and we did have that event last week. And we still, by the way, have volatility bid, and a lot of that has to do with the underlying structure of gamma. So this is a note that I wrote for clients on Friday, and why it mattered is because we had done some of that unwinding into Super Tuesday. It was actually now time to look for a bounce, right? So I was very bullish going into Monday, but I also, you know, with a caveat said, but we're going to have elevated VIX for the next month. It's going to stay, it has to burn out, kind of like coronavirus almost. It is going to be a major force in our option pricing. So for example, calls and put IV, this, I don't know if you're, hopefully you got some options trading lingo under your belt, but this is the implied volatility. And when VIX is suppressed, is low, right, when we had the 12 on the VIX, then it's very low IV often in your options. The S&P, for example, if you trade indices. So it is now very elevated, and it's going to stay elevated because we printed a 50 in VIX. So now, this is the important part. Before, a 1% move in the SPX translated to a 16% implied volatility move, okay? As soon as we hit 50, not 12, but 50 in the VIX, that means the upcoming month options are priced as if SPY will move 2% per day. Guess what we are doing right now? Moving 2% a day, aren't we? Intraday, it's much more. But you know, we're closing up 2%, we're closing down 2%, in some cases 4.5%, depending on, you know, what's happened intraday. But the point is, versus 0.68% per day. So it's going to be harder now to make outsized returns, that explosion, if you will, of IV if we have elevated IV. So one of the things that I suggested was to, you know, call spreads and put spreads and the rest. But this is definitely a big deal, if you will, in regards to how an options trader identifies the, you know, best option strikes and time, how much time we add into it. Okay, actually, I don't want to get into that right now. So, for example, this is very tough, very tough for trend traders right now. So the easy money, if you will, has been made, long and short. Now we're in the chop period of this market. We had a beautiful breakout. Obviously, if I can find my chart again, here it is. You know, we have this fabulous, this is on a weekly. This is the S&P on a weekly. Okay, this is a day, and this is an hour chart. We had this fabulous advance. We tagged the 10-week. We came back and looked like we might break it. We didn't. We were saved. Third time, we just cleared right through it. This purple or magenta line is actually the 100-week, and down below is the 200-week. And why I say the 200-week is because it's pretty important. We've been here before. So 2016 is where we actually found support for the S&P and moved much higher into the January 2018 high. This is Christmas Eve Massacre. We tagged it again. Really important. That was a V-shaped because we were also through the quarterly, which is a major support level. But I don't think we're going to have, I know people are talking about 2008. They're talking about a V-shaped recovery. I don't think we're going to have either. I think it's going to be its own thing, but it's definitely, in my book, not going to be V-shaped. So we come back up here to 32.25, wouldn't surprise me, but moving higher into this gap down would very much surprise me. And right now, the quant or the gamma work that I do on a daily basis is saying, yeah, we don't have that. What we have is weakness, actually. And let me show you what I wrote for clients this morning, just to kind of give you that. Oops, I don't want that. Did that wrong. So this morning I was, you know, again, I kind of look at this. First of all, what's the market doing? Direction of the market matters. And then sector rotation, and then individual stocks. So this morning, futures were testing 30.50 after a really nice, strong, you know, move yesterday. And that's what this chop is all about. Bring you in and then dash you up your hopes against the rocks. But this is definitely under the surface very, very weak. So this morning it was very clear that we needed to stay above, you know, 30.28, or we were heading lower. And the intraday moves have been very common now. So we kind of typically head higher in the afternoons, and that's where I contend the quant crowd, if you will, the vol strategies are buying futures. They're rolling their puts or adding or closing puts. But this is going to be a theme, not just this week, but I think into options expiration next week as well. We might actually head higher into options expiration as they roll those puts. So anyway, the gamma levels in vol strategy programs right now are negative. They're important because that tells us that there are puts that they're adding. And I'm, again, talking about the vol strategies that have, you know, major money under management, but they're not buying calls. So where are the calls? That's the bullish stuff we want. That gives us, if you will, kind of the wind behind our sails to go in and have a directional move. So that move that we had from October, November breakout until 2 weeks ago was with the current. We were not fighting the current. These vol strategies were buying calls, rolling calls. That's bullish. So it's easier to stay long, especially if you're a swing or a trend trader, when you have that knowledge and you kind of just ride it, right? So now we have a different situation, very different. That's not what's happening. So we don't have a wall of calls that keep building up and building up and building up. They actually had to de-risk last week. They had to unwind that VIX skew last week into the Super Tuesday event and into options expiration, which is coming up, mostly the Super Tuesday. Coronavirus is, of course, creating even more uncertainty, and why the hedging activity. But it is that hedging activity that's keeping volatility bid, and it's going to take time to burn through it like a virus. So it can spread quickly, meaning it's risk-off trades. They're still bid. You can look at bonds, you can look at gold, you can look at volatility, and to a degree, I joke, Apple and Microsoft, right? That's where folks have been hiding out. They have not fallen as much as the other ones. Yesterday and the day before, dividend plays are picking up because they actually return a yield that's better than our treasuries. The coronavirus watch list of vaccine providers and hazmat suits, that's obviously right now all the rage, lots of speculation there. So when these reverse, these tells reverse, I'll have a better feel and confidence that the market actually is stable enough to go long for more than just a trade. In the meantime, it's a chop zone. There's a lack of calls. It means there's weak support. The rug can get pulled anytime. So re-risking is adding more risk. It's bullish, and we can see it in option flow at a gamma level. Closing and covering puts, buying futures, that's bullish, but it's the degree of, right? And so right now, it's just been really the end of the day. Can we get that for 2 days in a row? Can we get that for 3 days in a row? Can we get over some of these key levels, right? Like 3150 and 3225. So we've got some levels in the SPX, which we really need to get above to have support that we're going to head higher and not have this rug pull. Does that make sense? So that's unfortunately not what's going on. They're re-hedging. It's bearish. They're adding, this fresh dealer selling on top of already negative gamma. It expands the price distribution down. So this is one tool in the toolbox, but it is the backdrop, and I kind of put that out there because it doesn't, impact. I shouldn't say it doesn't impact. You might think it doesn't have anything to do with like a short duration trade, right? I chase 1 to 3 days, swings 1 to 3 weeks, trends 1 to 3 months. But yeah, it really does matter because I want to be in the direction of the trend. I want to be swimming in the current, not against it. So that's really why I bring that out as far as what is this deal of options. And I know you probably thought I was going to talk about unusual option activity. Well, this is let's just say the grandparent of options, right, is this flow of vol strategies. And then we have, let's just say, institutional option flow, which is large size. Like someone today put down a $14 million premium on win calls in September. That's pretty big size. That's typically not your individual retail, right? So, and then there's just the child, the small smattering of option flow that comes in, and we'll talk about that. So let me put this away and show you what I mean by that. All right, so we talked about, let's just say respect the grandparents. That is the big institutional flow under the surface, okay? Now, sector rotation, where is it going currently? You can see it in bonds, right? This is TLT. You can see it in gold. It's staying up, it's trying to move higher. There's no question. You can see it in volatility. we're still elevated from this breakout. It's not going down. It will eventually, there's no question. But as I mentioned, we have a lot of fear in the market, and we also have a lot of dealers that are not covering and going long yet. So this is going to stay elevated. Now, this area of individual stock plays, you can look underneath it. By the way, here's an example of VIX. I don't want to leave this chart just yet. One of the things that I show for clients, okay, is this idea of multiple time frames. And I use this very much in the same way I just said, the grandparent, which is the weak, has the respect, the most respect. The parent, the child, that relationship. I like to see multiple time frames, and I trade accordingly. Chase our day, my swing trades, I look at a day. My trend trades, I look at a week. And right now, this is still in trend pretty darn strongly. So when I'm looking at the option flow, even in VIX, you can see what I mean. If you look at an option platform, you will find this thing called open interest. Now, I happen to be able to, in this charting platform, I don't use this to trade, I use it for charting. I can do custom programming to create scans and conditions and watch lists and all the rest in one place. I like that. And I can also import the option data. But my point is, you can see the hundreds of thousands of contracts that are in this product. You can do it for any product. So what I like to also look at, especially for chasing intraday, is, and positioning and sentiment, what are they doing today? Volume is what's just come in today. And you can see they're coming in with some pretty big levels still. Now, this does not tell me if they're buying or selling this particular call or put. I have to do a little bit more research. I have a subscription service. I can research a little bit more of, what they're doing as far as a strategy, or I should say as far as a tactic. But my point is, you can find a lot of information in an individual stock by how much, flow it's getting, and volatility is extremely big. So now going into, let's say, something a little bit more manageable. Regeneron, just for example, on a weekly, if you can, this is actually a trend idea, swing that's turned trend, that I presented when I saw this morning star reversal. This is what I mean by matching up your option activity with your chart read. I am a candlestick person, but I'm also this more than candlestick. A whole bunch of stuff has to align. There has to be a story, okay? There has to be a really great chart. I like the fact that this was a morning star reversal. It got above the 10 and 21 week moving averages. It moved through everything. It digested. It did break down, but then it formed another morning star reversal. And when it did this pattern, which was just a few weeks ago, I know it's moved an awful lot. I recommended when it came out, I think it was 350. This 352, yep, the monthly. As soon as it got above the 352 and into this area, my suggestion was, okay, this is going to be a trend play because this is such a strong pattern underneath the surface. So level by level, it's been tagging. And I can also tell that the sentiment is still with it. In other words, it hasn't done anything wrong on a daily. You can even, you can see back to this area. It broke above all the moving averages on a day. I'm not chasing this, so I'm not going to worry so much about the hourly time frame. But you can see that it definitely stayed above the 21 and the 8 and the 3. These are very common moving averages. This would have shaken some folks out here if that was a ghost print or an actual print. But the point is, the option flow has also continued to be bullish. You can see that it has not only advanced in price, okay, from this 350 area where it broke out, gapped above, but every day it has gotten call buying very strongly. We had one day with a bearish engulfing, didn't last very long, and it shot up, and we are right still moving higher, 495 this morning. So option flow is one thing to keep me in a trade. If I see anything really big and ugly that's come in, I'm going to think, okay, they're really selling a whole bunch of calls, so they think it's going to slow down. Or maybe before an event, earnings comes in and they're hedging. Maybe there's a news item. I don't know. But I can see that there's nothing but calls here. So that tells me that this trade is still working. Stay. Right? Long and strong. This is, again, a tool to use. Now let me back up to Gilead. This is another one, which happened to be, ironically, the Friday, the 31st, before this popped up, I saw that this was going to be used as a test in China for coronavirus. Saw that news item. I run a live trading room, so hence this is why I, am spying market moving news. And it has been in this incredibly long digestion, if you will, for a few years of trying to form a bottom, specifically the past year. It's just been lost money. It's been, a value trap. Well, that was news. So I didn't feel like, oh, we missed it. No, because it was actually the following week when I suggested a financed call spread, which is basically buying a call, selling a call. I happen to recommend a 70 by 80 for April, and selling 62.50 or $65 puts against it. It finances the cost. Now, there's a premium involved. It happens to be a debit, so it's not a credit, but that gives time for this to work until April or until 80 is tagged. And you can already see that this almost tagged 80, came back viciously, but that finance call spread is okay. So that's the funny thing about it. For even on this day, even if it wasn't purchased here, it cost $1, it's now $4.50. So that was an April swing trade based on this chart, based on the call sentiment. It was not even there yet. There was not call buying. It was too early. Now look at it. If you can see, do you see, like, you got to go all the way back down here. They could honestly be selling those 62.50 puts, because that's exactly the strategy that I suggested, a few weeks ago. So my point is, this sentiment is still wicked strong. So whether it's trend play, whether it's swing play, I can tell if the sentiment, not just the chart, right, but the sentiment is still bullish by looking at option flow. Does that make sense? Oh, get chart. Hold on. Oh, not for me. Okay, I missed that. All right, so the sentiment flow is one way that I use options. And then let's just good old-fashioned chasing, okay? Netflix, for example, is going to have way too much chasing. And by that, I mean, take a look. They're weeklies. I don't know if you noticed, but with Gilead, for example, they're coming in with monthlies, more monthlies. There's a chase. There's another month. That's a leap. That's January 2021. But it's all bullish. So they're coming in still strong. They could be late, but my point is that is one way to kind of keep in the right trades. Netflix, they're chasing this every single day. It's a lot of fun. You can get just 1% move and have a 50% option gain. So the chasing with weeklies, especially when you get into a Thursday, Friday lotto situation, is also a lot of fun. But following option flow isn't so easy because their time frames are much, much smaller. So they're not, you can clearly see they liked Netflix this morning, maybe not so much right now because it's pulled back, but into tomorrow, maybe there's a sentiment that this is we're going to be bullish, and Netflix has been very strong in this down market. It didn't break the trend line. So there's lots and lots of chasing going on in these momentum stocks. So it's a little bit different than using option flow for finding, good trend and swing trades. Another one, for example, is LK. So LK is Chinese coffee company that has been it's been an IPO, but it's also been kind of a love child of some fundamentalists who say this is a value great value, even though China's having trouble with the coronavirus and such, and their economy, that this is just an untapped market, and it's going to be a fabulous, fabulous play, fundamentally speaking. So you can see where this broke out, this IPO, recent IPO name. I've traded this a lot. It did break the 10 week. It came down to the 10 and 21. Excuse me, the 30 and 21. It gyrated kind of sideways for a few weeks. It's trying to break out, and then it really did make an effort just today, actually, to get above 41. So we have been spying this anyway because it's been strong relative to the rest of the market, looking for pockets of strength, looking for potential, breakout, even if it's just intraday. And sure enough, today, this started to get a lot more play. Now they're chasing. They're doing just what I'm doing. They're looking at a perfect example, a $42 call, which at the time, 2 hours ago was a little over 40, and it's up 260% intraday. So when you look at the option flow by volume, and I sort from, the most to the least, I'm only interested really in the most because that shows kind of commitment. They're smart ones are maybe going in the money and they're paying up, right? It opened at 675. It hasn't made so much money, but it's it's safer. It doesn't have such a big loss if wrong. But these folks are definitely, cowboys, cowgirls, and this is a breakout in the potential making. It's something that they probably are going to have to roll into next week or take their profits soon if it goes right back against them, whatever. This is another way of using option flow to identify some great chase candidates. And this is a smaller one because you can notice with Netflix, right? You got tens of thousands of contracts in weeklies versus LK. You have thousands of contracts, mostly weeklies. But the ones that are coming in and positioning, you can see Gilead, they're coming in for April, right? And for leaps and also monthlies. They're not doing so much of the weeklies. And it does have weeklies. They're just not as excited about that. They're more taking a position, a swing trade or a position trade in something like this. So another would be Ego. Ego is actually a gold mine. And this was one that I had recommended before it actually broke out on earnings, and have no edge on earnings if it's going to go well or not. But the particular trend line, wedge, and Morningstar reversal just looked like it had force to shoot up. Now, from a chart perspective, this measures with a fib up to $14. Now, it ran 8% at the open and kept running. It was at least 18% by the end of the day. Next week, it did a major pullback because we had a market that basically sold off everything, gold stocks included. Only thing that stayed bid were bonds last week. In any case, but it did not break the 21 day. It is digesting. It still has a shot at this 14. It's still bullish looking from where it came out of this squeeze, right? It just got really ahead of itself. It had a pullback. Now, how's the option flow? That's what I look at. I think it's going to be a little while. I don't think it's going to be a slam dunk. It hit the 200 and it got repelled immediately, but it's still bullish. So here's the option flow. By the way, when I first looked at this before this earnings, there was nothing for option flow. It was like 80 contracts. People were not excited about this particular gold miner at all. Now every day I see calls coming in. They're not, as big as a Gilead, okay? But 2,000 contracts for July, that's pretty nice. Not bad. But the point is I see it now more commonly. They're coming in for calls. They're coming in for calls. It finally hit their radar. So that's an example where even some of the smaller plays are pretty helpful. Now, I can't do that with a lot of the coronavirus stuff. I started this watch list, and you can see it's obscenely busy. So this is coronavirus watch list, and you've got, 20 vaccines, I think, that the CDC tagged as potentials, or I should say we're under development for coronavirus. You've got hazmat suits and masks and gloves and, Zoom, which is teleconferencing. There are all kinds of things that I have added in here for reasons that had to relate with coronavirus. Now, not many of these actually have an options market. So if I was to hit CODX, which has risen in price since I recommended it on February 11th at $3.36, it's up 350% on a stock basis, but there's no option. However, some of these have actually made a market. So literally, if they didn't have much in the way of options, they do now. This is the fascinating thing about speculation. If there is no options market, it's kind of a little dangerous. I should say no options market. It's hard to get in. The spreads are very wide. It's hard to get out. But once they actually get more participants involved in that stock, and you can see this is a gorgeous one as well. So it had the really nice pattern, and then it had, I think on 211, right here, 211, I recommended that before its huge breakout, as long as it held $3. So then it does one of these. But there weren't very many options. It was a small market, and now people see this price advance, 190% in very, very, very short time, and they come in and kind of build up that market. So I caution, don't go into a strike that doesn't have any liquidity. You won't be able to get out. But these are getting bid up, so they're getting more healthy, and because they're more liquid. Does that make sense? Okay. If you have any questions, like if you want me to look at any particular stocks, definitely let me know. I know that some of what I do is a little bit kind of more advanced in regards to the gamma stuff that the vol strategies, which might not have been on your radar, but I want you to understand that relationship, if you will, of who really moves the market. And then of course, the players that come in that are of size. For example, Wynn today. I don't know. What's up with Wynn? Looks terrible from a chart standpoint. Nasty. Just Macau revenue dropped like a rock. 90% just stopped, right? And 78% of Wynn's business is Macau. It's kind of a big revenue stream. So they immediately turned, could not get above 136, which was weekly, and then broke all the moving averages, and they looked terrible. Toast. Heading down to 93.5. Well, today, big option flow came in. That represents right here, September 105 calls. That's almost $15 million in premium. That's not little retail, that's institutional. Could be hedging, some short stock, but whatever. It's definitely not, they're not alone. They're coming in, they're buying in the blood, but they're also going further out in time. This is another one, June, the 120 calls, way out of the money. That's a few $1 million right there. So this is size, and it's coming in, expecting potentially this to bottom. I don't know, to me it doesn't look like much of a bottom is in, like this would not interest me. However, I do know just that they might put a property, not that I know they're going to put a property, I do know that there is the potential that they could have put a property up for sale. For example, they just built the Encore in Boston, and there was speculation about 6 months ago that MGM was interested. Now, MGM buying a Wynn property would definitely create a reversal in this, right? Would make Wynn go up potentially. What's MGM doing? This is total speculation, I might say. I take a look and I'm like, okay, they got some pretty good sized puts that also came in today. Anyway, my point is I'm looking to now put this on my radar. I'm not expecting, any, and this is, by the way, near dated, these 36 and what are they doing? They're rolling, trying to figure this out, but I'm looking at a large order that came in and trying to figure out what potentially is in the works. They're bullish for WIN and bearish for MGM. Want to keep my eyes open. That might be some interest. I want to see if more money, more option flow comes into that name. Personally, the chart does not interest me. Looks terrible. But I'm just letting you know that that starts to get my attention. Okay. Let's see if there's a question. Did you catch the first part? I talked all about SPX. So my biggest contention with this whole market, and I wrote this, where is it? Okay, I don't know if you can see this. Okay. And you know what? I need to actually look at the market right now real quick to answer your question. Okay, they're here. I'm gonna put this over here for a second. All right, so with SPX, I have it on another screen so I can see what's going on. Big picture, as I wrote to clients on Monday, the easy money has been made long and short. I fully expect this is now the chop in every direction for the next month, while volatility gets a grip. Now, volatility could very well come down next week into options expiration. Why do I think that? Because these vol strategies, and I'm talking the quant, the gamma, the CTA type of activity, could be covering those puts that they've had on, because that those tactics lose value as we get closer to options expiration. And we can see that there's a lot of puts that expire next Friday. Why would I think that's more bullish than bearish into next Friday? Because they cover, which means they bid up futures. So there's a relationship there that is created. It could be typically in the afternoons. I think that's when it's happening, because that's when we have these big spikes that are bullish. At least it's happened 3 or 4 afternoons. This is, again, a thesis, and I keep trying to go back and look every single morning and every single night what's going on in that world to better have a directional feel for the S&P, because that's going to make the weather for what the sectors and the individual stocks do for the most part. You can always have your one-off, stock selections do something totally different, right? Like Luckin Coffee today is higher. That's not what I'm talking about. I'm talking the majority, right? Right now we have kind of an equal level of lots of stocks down and lots of stocks up. We don't have this huge, massive distribution of 493 stocks were in the red in the SPY, and only 7 were green. Okay, that's massive, massive to the downside. We also don't have that in reverse going on. We have this tug of war, which is complete chop fest. So right now, it's not so much fun to trade SPX directionally unless you have a thesis. My thesis was we would bottom on Friday afternoon. We had head up. Super Tuesday would get unwound. We would figure out what the gamma risk was. We'd watch that very closely. Likely we moved higher into the 32.25 area. If we were to get above 32.65, I would be very bullish, but I fully expect a retracement at 32.25. So every day we have a range of 4 to 5% intraday. That's all very tradable, but your question and my answer might be, I have to know your time frame. Like, are you day trading, swing trading, or what have you? But that's basically the big tell for me is time frame. And then of course I'm watching bonds and gold and Apple and Microsoft, because if they sell Apple and Microsoft, why buy anything else? And right now these are not moving very much. Now, used to be a 2% drawdown in Microsoft and Apple would be a fabulous option play, right? We'd have a really good time with that. Right now, it's the equivalent of 0.5%. So now a 2% is really like a 0.5% because IV is so elevated. You've got IV here in the weeklies at 61, 62. And they're normally half that. But you also have VIX, which is double, triple, you know, where it's supposed to be. Ah, so you do fancy stuff too. Okay. So yes, so that was, for example, what I said this morning in SP. Oh, hold on, let me get this down. So you're doing different strategies on directional options. I'm looking for volatility. So this kind of stuff is your bread and butter. Your butterfly and ratio spreads, this is perfect for you. I do levels. I give the levels, but I want direction. So this to me is absolutely no fun to trade intraday. Last week, totally different story. I had a firm feel. Every day was massive distribution. And it wasn't until Friday where I said, okay, we can bounce now. But this to me, this bounce into the 200, and then we get a little above it, then we come back down. We get a little above it, we come back down. That's chop fest. So to a directional options trader or directional trader period, that's dangerous. So you either have to go wider on your time frame or extremely, very small. And wider, who knows what the market's going to do? Are we going to get back above, right, this 3150? And if so, we still have all kinds of resistance. You know, there's a lot of work to do, tons. So I think your strategy actually with your butterflies and ratio spreads, you're really taking advantage of this absolute theta killer, which is, we can't possibly with, you know, unless we have a 10% move between, you know, no, it's just not going to happen. We're not going to have these kinds of expected moves anymore because the SPX has also now been contracted, right? So we used to have these expected moves of, let's say, 36 points. And it was getting a little volatile. It went to 46 points. Well, then we had last week happen. So now the expected move is just whacked. And we're not going to move that much. We're actually going to be, you know, intraday wild swings, but we're actually right where we were on Thursday. So, yeah. So you have a 50 wide, point spread for an expiration tomorrow. So tomorrow the risk is we have non-farm payrolls. Non-farm payrolls, it has not been very exciting. You know, unemployment rate has been low. Next month it probably will be a lot more exciting, you know, because of impact from coronavirus is going to start picking up. But I also have my intermarket stuff says we're going to have some revisions coming down the pike, and they're going to pop up that unemployment rate, which is obviously market bearish. So my thesis right now is bearish into Friday. Let's get through that. And then let's rally into options expiration. Let these hedges come off, which is the big money. And then go back down again. So for Friday, I'm not so bullish because of that risk in the morning. But intraday, yeah. All right, so I don't have much time left. I want to go over something real quick. I didn't realize. So I've talked about gamma. I've talked about how I use options to identify trends that are continuing and the sentiment that supports it. I've talked about chases and how sometimes stuff comes up. I'm not somebody who's going to see an option flow and go, ooh, exciting, let's go chase that like a squirrel. I have to look at a chart and I have to be convicted that there is, that's supporting my chart read. Does that make sense? So I'm not just going to be trading anything in options, especially around earnings. Oh my gosh, that's crazy. But a chart to me is very, very helpful when used in combination with the option flow. So I do trade small but frequently. Talked about this yesterday. I'm definitely more directional trader. I do like financed call spreads for the set it and forget it type of thing. I'm not this butterfly and ratio spread short-term trader for theta decay. So that's a different talk. I do have something I wanted to show you, which was if you kind of want some feel for the market, or I should say want some advice from someone who has a feel for the market, I am that consultant. I am that educator. I am that person who runs a live trading room with the commentary, with the trade ideas, 3 to 5 really good ones a day, and the reasons that support it. So in other words, what's moving, why it's moving, and how. And I also have 2 things that I wanted to let you know about, which is on my website, I have this free bait, which is underneath public blogs. I do offer up once in a while some membership stuff that's unlocked, so you can see how I approach the market. I also sign up for that. It's really easy. I do some occasional free posts, free videos, etc. Good stuff. I also have this new, and this is in large part to kind of celebrate women in trading and in finance, and both I am, right? I'm both in trading and in finance, and I want to promote this and encourage, elevate, attract women in to do more of this management of discretionary income, men too, of course, but on more of a larger time frame. So although I love to chase intraday and swing trade a few weeks at a time, there are people who really don't have that luxury, if you will, of sitting in front of their computer. Most of my clients are the ones that sit in front of their computer and trade actively and invest actively. So this is the coupon I wanted to kind of show you. My trading room with all of my, features and benefits, if you will, is $350 a month. This is an offer for $100 off. There is also a new product that I'm launching, which is more of the self-directed trading. It's twice a week, and I'm going to be going over the key trades that are working and why, like I just did, Regeneron, Gilead, there are obviously others, and how to position with options or stock, the low risk entry, where to set your stop, profit targets. And I'll be doing that twice a week on basically an hour webinar like this with clients, and that will be more for portfolio positioning. You got a stock that you're excited about, in technology, or maybe you're looking at this theme of coronavirus, but there's massive volatility in these coronavirus watch list plays, right? Massive. And that's very unnerving for a lot of traders, especially if they're not watching, right? Or they have way too much invested. So about position size and time frame. So this is my offer I wanted to put out there, which is more for the twice a week. Let's take temperature and do a really in-depth Q&A of select trading vehicles. That's what I wanted to position for women, but also for men, of course, to get them into this kind of environment of learning more about the market, what's moving, why, and how to trade it. Any last questions? And I'm sure this video will be up soon because David was just really on top of it. I also invite you to come on in and sign up for my Twitter handle. I have 2 actually, a macro and a micro. If the micro is more charts and individual ideas and kind of market tells versus the macro, which interests me tremendously. Yesterday, David sent out the announcement of where you can find the videos. You can see mine from yesterday, and it's detailed of how I approach, and more specifically, how I have come to be known as a volatility trader. And timing tops is a really big deal. I write every day. There is quite a bit that I'm seeing for inflection points. So that helps identify new themes. Like, for example, yesterday, dividend plays are just screaming higher. And it was very interesting because this kind of feeds into the theme of folks that are not in front of their computer, or might be really wondering, do I add now that we're on a pullback? If so, which ones are better? What about gold? I have very strong position and feeling about gold. So this is one of the safety trades, if you will. Gold will benefit. Fed announces more QE, higher deficits. Gold will stay bid. Geopolitical flare-ups, pandemic headlines, gold bulls are active. But yesterday, for example, I did a writing on dividend stocks on a tear, and these are basically hot because rates keep falling. And even though they are normally not safe, like LB Brands is Victoria's Secrets, their chart doesn't look so great, but their dividend yield is high. The point is there was an absolute rotation into low volatility stocks, and they were trading like momentum stocks the past few days. So this is an area where, believe it or not, we were chasing, but also swing trading like Clorox. It's also not just a dividend play, it's a low vol play, but it's also a coronavirus because of disinfectant. So it's kind of interesting what I am spying. And then of course, and these are large cap companies, low volatility typically, not all of them, but you know, a good number of them. And here's their trailing dividend yield and why they're getting bid up. So we look at structuring some of these plays for portfolios, but we're also playing them in the trading room because they're massive percent gains with great option returns. So hopefully that helps. And I wish you a great afternoon. I hope you check out my website, at least sign up for the free stuff. And hopefully you want to check out the trading room as well. I have a day pass for $25. That's really easy to come in and see what you got from me. And then of course, ask any questions there as well.